Doing very well, very, very well. I would say better than anybody expected could be done. We've knocked out their Navy, their Air Force, all of their radar, most of their capability in terms of manufacturing. They have nothing other than they're mean and they're smart and they still have some capability. But 4 months ago, trust me, they were much, much stronger.
All right, President Trump considering an expanded military offense in Iran, saying that the regime is not ready to make a deal. Welcome back to the second hour of The Big Money Show. I'm Taylor Riggs, along with my inspiring co-host today. And with us for the hour, our very own Lauren Simonetti. So great to have you.
Happy Friday. Thank you.
So the president reportedly close to ordering what he says would be America's biggest attack on Iran yet. And he is warning Russia and China to not give or sell weapons to Tehran, saying if they did, it would be very bad for them. All right, Lauren, as we've said on this program, one of the best things we love about having you is you're tracking who's going in and out of the strait, which waterway is open or closed. What is sort of the latest as we're looking at oil trying to not get over 100?
Well, Hormuz is really easy to track because nothing is moving in it. 6 vessels crossed the strait yesterday. I don't know of any yet today. The other strait is Bab al-Mandeb, and there is traffic flowing still there. So we're watching 2 straits now. And I think the American people are getting really fed up because gas prices are back at $4.10 and probably going higher. Some relief for oil prices today. We're back just under 90. And if you look at that latest Fox polling, it shows Americans are not happy with this war. And basically, 2/3 think it's going to last a year, if not longer. So we want a win. What does a win look like? Does the president know what a win looks like right now? I mean, think about it. Wall Street Journal reported he's getting fed up, diplomacy not working. The New York Times is reporting that Iran rejected the ceasefire deal, the proposal that was delivered by Iraq from the U.S. Iran reportedly rejected that. So what do you do now? Do you position yourself militarily, and it seems like we are, for a really big attack, which President Trump has promised?
And then, Brian, what does a win look like, I guess, for you?
Well, so that was interesting. That was interesting when you said that, Lauren. And by the way, your reports on traffic are like my first reading. It's second reading. First I check bond yields. Then I check
He's a numbers guy.
Cushing levels. Then I check traffic.
I want to be number 1, Brian.
You're getting there.
Okay,
You've moved way up the rankings. The only thing I would maybe disagree with is I don't think that to me, President Trump understands what a win is. And that is, these guys cannot have nuclear weapon capability.
True.
Okay, I think that's clear. A lot of people say, we don't know, what are we in this for, blah, blah, blah. I think that's clear. What's harder, I think, where you have even in the president's mind, how do you get there, right? The path to get there. And it does seem like the administration thought that path was going to be a little easier to go down and quicker, and these guys wouldn't push back as much. And even in that clip we played right at the beginning, for the first time I heard the president say something I haven't heard him say before. He said, we've destroyed them, blah, blah, blah. He said, they do have some capability. And I've never heard him add that to the end of a statement. And contrary to that showing, oh my gosh, that's a problem, I actually viewed that as a positive. He's telling us we've broken them down, but it is the case that they can still lob a missile here and there, a drone here and there. They still have the Houthis, so they do have them things we need to take care of. And when he says that, then I think you're helping the American people understand why we're still there and what we're doing. It is a more accurate assessment of what's happening on the ground. And I like that I'm hearing that, because then I can evaluate what he's doing in relation to the situation on the ground. And to me, that's good.
Jerry, do those comments help even after some people, I think, maybe have been frustrated that we kept hearing, like, the Navy's at the bottom of the sea, we've totally obliterated them, they have no ability. And then when they did, and we came into this week after last week's weekend thinking like, well, they have some capability. How do you kind of square those comments after everything that we've seen this week?
Well, I can't square those comments. Instead of feeling relieved to hear them, I felt anxious hearing them, because those comments were so, they starkly contrasted with what he had said before, and I thought, that doesn't make a lot of sense to me. But I want to ask Lauren a question about Bab al-Mandeb And how likely is this that this becomes a really big part of oil delivery globally, do you think?
Well, it will add cost and time to the
Yes.
delivery, because what has to happen, since the Hormuz had all these disruptions, what Saudi Arabia did is they used the East-West pipeline, and they took the oil across the Arabian Peninsula to the port of Yanbu, and then they got it out from the Red Sea through the Bab el-Mandeb Strait to the Gulf of Aden and out to the rest of the world. Now they're rerouting it north to go through the Suez to the Mediterranean, adding 2 to 3 weeks, depending on the route you take, to get where it needs to go. There is still a lot of traffic moving in that strait, despite the 2 attacks that we know about from the Houthis on Saudi tankers. This is very much just a Houthi-Saudi story. Even
because
though
there were
Iran
2 Chinese
Yes.
carriers that got through with the Chinese flag, I thought.
Yes. Well, I'm not sure about the flag, but those vessels were slated to go to Asia and to China. Those were the Saudi vessels.
But it can make a difference, you're saying. And in the long run, can it make a difference? Because the added costs
it's time
are
and
so
money,
high.
insurance risk. There are reports that in order to get crews to get on vessels in either strait, they have to pay like 6 months' salary as a bonus to make the crew comfortable to get on that ship. If you look specifically at the Strait of Hormuz, imagine spending 5 months stuck at sea, not knowing if you're going to get attacked, and then you do get attacked, and then you still can't get out. I mean, I've spoken to these ship owners. That's the feeling. We're 5 months in now.
Josh, how do you view this? Also looking at, I was reading Neil Dutta's piece this morning over at Renaissance Macro, and saying that, frankly, the global economy looks pretty strong. A lot of things have perked up in July. That goes back to my theme that maybe real yields are rising because we're forecasting higher growth on the horizon, though that's been a big debate this week. In the backdrop of a healthy economy, oh my gosh, we saw jobless claims yesterday, the lowest since like 1969. Continuing jobless claims are low, so that means that once you get on jobless claims, you're not repeatedly having to file for unemployment benefits. You can get off the government's dime, get back to work. How do you sort of view all of this through that lens?
You brought up Neil, and I know Brian wants to talk about the Fed, so we do have to at least mention
Another.
Neil's case with all of that and the strong economy angle is actually he thinks the Fed's going to hike this year, which would be interesting and perhaps change the dynamic a bit. But I do think, Taylor, you bring up the economy point here, and we keep on talking about it's been 5 months. How much longer can this really go? I think still most economists that you talk to right now are not arguing, okay, oil goes back above, or sorry, gasoline goes back above $4 a barrel. I'm worried about the consumer in the second half of this year. That is not a common call that you're hearing right now. It is not great. I don't want to go to the pump and pay over $4 a gallon when I go home and I'm driving a car more frequently. No one wants to do that. But from an aggregate level, economists are not concerned that that is going to derail the overall outlook for the year.
Which means the outlook for weighing the risks leans more heavily towards inflation than it does the labor market.
Definitely.
Is that what you're saying for the rate hike?
Yeah. Oh, I think it's 100%. The last couple summers we had a growth scare, and that was what got your summer stock swoon. This year, it's clearly an inflation scare. Inflation risks are to the upside right now, and that is why rates are not going to come lower. That 10-year isn't coming lower, and that's just a very obvious risk because, again, we're talking about the extension of this war. When is the conflict going to end? When is oil going to come back down? After 5 months, I don't feel like it's
Brian,
happening next
is your
week.
Let me
Inflation
tell you
risk,
this.
like, is your inflation risk totally built on energy? Is that it? Does it rise and fall on that?
No, because I think there's a lot of different inflation risks right now. So one of them being AI. We've talked about computer prices going up. That's one piece of it. You have a little bit of tariffs, but if you look within the releases now, a lot of the tariff pass-through has already sort of happened. But then you have...
I don't see tariffs contributing to that.
You have energy as an issue, Brian, specifically with energy pass-through over time. I mean, I talked to an economist at RBC. This was a couple months ago when the oil price spike first happened.
Yeah.
He said, watch out for fertilizer prices next year. Next year. That's a pass-through you're looking in another year. So again, it's not inflation's going crazy higher from here. It's just, I don't know if it's going lower.
And in addition to that, Brian, you can't hike rates into a supply shock. Hiking rates doesn't produce more oil.
I do not see a rate hike this year. I do not. I do not agree with whoever that guy was who said.
But
Neil.
If you have a Fed that allows expectations to become unanchored, my view as a consumer that prices are going to be higher a year from now. That means that we've all lifted up, and then behavior starts to act on that. So I think the Fed might be balancing. I can't hike rates into a supply shock, so there's no way I could hike rates right now. But if consumer expectations start to become unanchored, then that embedded long-term inflation does indeed start to come
Yeah, but I think
up.
that's a super risky game for the Fed to play, to try to read consumer expectations and say we're going to get ahead of those by hiking rates into expectations. I mean, if you're a consumer, what you saw in June was oil prices came way down, and we had negative month-over-month inflation, and we had a core at 2.6. Like, so you get energy, and I understand the data center case on and so forth, but you get energy down. People have seen that immediately has an effect for them. I just think Warsh doesn't seem like the kind of guy who's going to say like, expectations. I'm really concerned about that. Let's hike rates.
I'm not talking about Warsh. I'm talking about everyone else.
Well, okay, fine.
Committee.
Okay, fine.
Committee.
Maybe the committee does that, but that would be profoundly stupid in my view. Sorry.
For Americans, because we are swimming in oil, although we don't have as much in storage anymore, July 6th was the date. We had erased every penny that the price of oil gained since the war. It has come back up since, but we did it. It happened. And since we have production and drillers are actually drilling more now, they are starting to. They're starting to take on that risk because the prices are so volatile.
Yeah.
And even if they're not buying like new rigs, they're making sure they can get the most out of the ones that they have. They're getting that oil to market. So I think the energy price shock is temporary.
I want to talk about trends that may or may not be temporary. Do you guys wear Uggs or Hokas?
No.
Uggs, 100%.
Hokas? What did you say?
Taylor, I have like a closet just full of Uggs.
I've seen you in Uggs.
Yeah, I know.
Is she wearing
It's
Uggs
embarrassing.
right now?
Are you wearing
Not
Uggs right
now.
now?
No Uggs right now. I have a pair of Uggs.
I can't show
I
you
have
my
man
shoes.
Uggs.
I love that.
Yeah.
For real.
Well,
Winter
I'm
boots,
dying to know more.
I'm a huge Patriots
Are
fan,
they
and Tom Brady was an Uggs guy. I had to go
Did
out.
they come up high to your
Yeah,
ankle?
are they
What
the
do
ones that
Uggs
tie
look
up or the like?
Dude, you're from Massachusetts. You should have.
Yeah, they're the tie-up winter boots.
Okay.
They're one of the boots that
We'll
we're
deal
Not
with
the
this in the
furry
break.
slippers.
We're
Okay.
dealing with this.
not the furry slippers.
But the
and they're not,
Tasman
like,
slippers, a lot of men wear, and kids.
Oh gosh.
Brian, you're a hard pass.
I do not have.
Now I know what to
We're
get you
talking
for your
about this.
birthday. Brian.
Well, there's good news and bad news. The good news is Deckers hit $1 billion in revenue for the first time, EPS beat, but there is worry about conservative guidance and slowing down. Hoka sales were up 7%, but that fell from 15% the previous month. UGG sales up 5%, but that's down from 9% the previous quarter. They're still guiding for about 5% revenue growth, but again, the market wanted 8%, so shares are down 1.5% today. And you don't wear furry UGG slippers. So I got everything I needed
I
out
don't
of
know
that
anymore.
segment.
Who knows what to think anymore?
Coming up, New York City Mayor Zoran Mamdani is telling wealthy homeowners to check your mailbox as backlash grows over his new tax plans. We have the fallout next.